If US rates are 5% or higher, what the heck are the rest of the world going to do? How are they going to compete with the Treasury to get financing? It's not like the US is the only one in a fiscally challenging situation here.
We are now joined by Brent Johnson, Santiago Capital, Santiago Funds on Twitter. Go and follow Brent. Good morning, and thank you for joining us.
Yeah, thanks for having me. It's fun to be here.
So, last time you and I spoke, well, it was the three of us, me, you, and Tracy. We were on together for that Spaces in December, and we had talked about how this year was looking like it could be like 2022. Boy, did we look real smart at the beginning of the year, didn't we, Brent? It was really interesting. Yeah, I was referring to you on X a little bit, but now things have changed a little bit, maybe. I don't know. What are your thoughts on this current market environment right now?
Well, I personally don't think things have changed yet. If you go back to 2022, and that's been my analog for, I think I started thinking about this in October, November timeframe because I thought we were going to have a new regime. And 2022 was kind of a new regime with regards to interest rates. And, a lot of Trump's policies would lead to a lot of this volatility that we've seen. But again, if you go back to 2022, between January and September, there was a 25% drawdown in the S&P, but there was 3 double-digit rallies, one of them 20% before that happened. And I kind of feel like that's what's happening again. Now, I don't know if we're going to go all the way back down to the lows that we saw a month ago, but I certainly think we're going to have more volatility. And I think the current rally is probably getting a little bit long in the tooth, so to speak.
Before I bring Tracy in, I have to ask you a quick question. We talked about 30-year bonds this morning and rates starting to creep up. I'm just curious, what are your thoughts on rates right now?
In general, and I'm not playing bonds because I don't have a really strong view, but in general, I think rates stay at these levels or go higher unless we have some kind of a catastrophic collapse, economic, data and everything collapses and there's a flight to safety. But barring that, I think rates probably kind of bounce around in this area and maybe go a little bit higher. If US rates are 5% or higher, what the heck are the rest of the world going to do? How are they going to compete with the Treasury to get financing? It's not like the US is the only one in a fiscally challenging situation here. If you can buy a Treasury and get 5, 6, 7%, why would you buy a French bond? Why would you buy an Italian bond? Why would you buy a Canadian bond? And anybody who thinks that, those other countries will be able to get funding while the US auctions dry up, I would, highly recommend they think again, because that's just not the way the system works.
So, and I'd like to get your thoughts on yesterday. We saw a bunch of deals with Saudi Arabia, UAE, and others in the Middle East, particularly in the tech industry. My first thought was, well, petrodollar is not dead yet, is it?
It's not dead yet, and it's not going to be dead for a very long time. The ties between Saudi Arabia and the United States are really, really deep. And I think a lot of people know about the dollars for oil deal, and perhaps then they know about the United States provides, essentially protection for the families in charge over there and help them develop their country. But what many people don't probably realize is that U.S. technology companies underlie their entire technology infrastructure. And MBS is trying to create, this economy of the future or country of the future or region of the future. They have great demographics. If they were to somehow break ties with the United States, how are they going to run all their technology infrastructure? Who's going to service it? Who's going to build it? Who's going to, implement all the changes? And the ties just run much deeper than you think they do. And then secondly is even if they wanted to change and they wanted to do something differently, unseating the dollar is not really fighting the United States. It's fighting the whole world. The whole world chose to use dollars. And the dollar network is probably the biggest network in history. Everywhere in the world knows about the US dollar. And so, to unseat the dollar and saying we're going to use something else. It would kind of be like me showing up in Brazil, getting on a bus and telling everybody you can no longer speak Portuguese. You have to start speaking Russian. They'd look at me and say, what the heck are you talking about? We don't know how to speak Russian. The world doesn't know how to do business in these other currencies. And they may not trust the United States, but they trust the dollar network. And then people will say, well, yeah, but now the United States has started weaponizing the dollar and they could get their reserves stolen. Listen, that's all true. So it's kind of a dangerous world out there. But what's the alternative? They still don't know how to speak Russian. And so I think this idea that, the petrodollar is going to disappear and there's going to be this new system that just comes online and, the U.S. is out of luck. I think that's just to kind of misunderstand the current situation.
Where does gold sit with all this, Brent?
I mean, it's looking pretty good, right? I mean, it's had a heck of a year. I think it's due for a pullback, and it's had one. It's down a couple $100 from its high a couple of weeks ago. But to me, this is an environment where you just have to own gold. Now, I don't really care what the price of gold does. I don't care if it goes up $300 or it falls $800. I'm going to own it one way or the other as kind of a long-term strategic holding in a portfolio. But I think gold probably got a little bit ahead of itself. And, I don't think this is going to happen, but I would just point out that the last two times gold made a move like this, it then subsequently went into a fairly large bear market. And now I don't think we're going into a gold bear market, but when you get a move that far, that quickly, unless the entire system comes down, which I don't think we're at the point where the whole system comes down yet, then, I think it's probably going to bounce around, at these levels. I think it probably goes a little bit shorter into the summer, a little bit lower into the summer, but I'm not predicting, a crash or anything.
And so you say you're not looking at the bond market. You're not playing in that field right now. How are you positioned in this environment?
Well, so it's a good question because we are always long risk assets. We have, and we're majority long U.S. equities. We believe that if you're going to be invested, despite it being a challenging environment, the United States still offers the best opportunity on a risk-adjusted basis. And so we're long a number of equities, but we've owned the same equities for years. Like I have positions in client accounts that have literally been in there for 15 years and we've just never sold them. And if you sell them now, then you're going to have a huge tax consequence. So what we'll do is we'll either increase or decrease exposure by using options around it. So, we've been mostly hedged and we're even net short in March and April. We are now back to being hedged. We're not net short, but we're hedged. And we've been building up our hedges as markets have rebounded. We do still have, all our clients have real estate, and so we have exposure that way. And we play volatility. I do a lot of tactical trading around kind of the core positions in the positions that are not equity based. And we mainly have T-bills, or 2 years or less on bonds. We don't have any kind of long-term fixed income positions.
That makes sense. And then I'd like to get we were talking about China tariff situation. Everybody seems really relieved that we have yet another 90-day pause. So I kind of want to know, what are your thoughts on this tariff situation? Where do you think we'll land? What does it mean? Are we just going to keep kicking that can down the road?
I think Trump is serious about the tariffs, and I don't think he is going to totally pivot. Now, to me, it's really interesting that no matter what happens, it's always viewed as the United States capitulating and China winning. I think if you'd have said at the beginning of the year, the baseline for China tariffs was going to be 30%, people would have thought that was extremely bearish. But because it went to 145 and has now been dialed back to 30, everybody says, well, the U.S. caved. Well, China had to make a lot of concessions as well. From a very big picture perspective, and I think it's always important to keep the big picture in view, is that there's three things that Trump wants. I think the one thing he wants more than anything in the world is to have his picture on the front page of the New York Times saying what a great president he is and what a great economy we have. The second thing he wants is his face on Mount Rushmore. And the third thing he wants is for his name to go down in all the history books as one of the greatest presidents in history, right? And I guess those last two are kind of related. But the challenge is, but what it's really about is keeping the United States as the global hegemon and not letting China usurp the United States. Well, you can't get your face on Mount Rushmore if under your administration, China goes past the United States. So that's number one. Number two, you can't get your face on the front page of the New York Times for having its great economy if China collapses. Because if China collapses, that's bad for everybody. That would cause a global crisis. So the challenge is keeping China happy or somewhat happy and functioning without letting them continue to accelerate past the United States. And that's really hard. But having said that, I think Trump is serious about kind of resetting the relationship with China and the world. He has basically thrown out the quote unquote rules-based order that was established after World War II. And now it's There's no longer any pretense about us doing this for the greater good. If the United States does something, it's going to be for the good of the United States. And if it's good for the rest of the world, then that's great too. But the number one thing is it's going to be good for the United States. And I don't think he's going to back down from that at all. And I think if he were to back down from that at all, he would be a political, lame duck. So I don't think this is going to end.
We've only got a couple minutes left with you, Brent, and I know that you're not super technical, but we've had this big rally. We're back basically to unchanged in the year in the S&P. What do you look? Is there any key levels? Is there anything specifically maybe you're looking at the indexes that maybe this rally does start to slow down?
Well, so I kind of keep it pretty simple. I've got a process that I've kind of developed over the last 25 years, and I use a number of different indicators, and none of the indicators on their own are that sophisticated, and they're actually pretty simple. But if you put them together into kind of a mosaic, it starts to tell the story. So at the end of last year, everything was super bullish, right? Whether you looked at technicals, whether you looked at the relative strength, whether you looked at sentiment, whether you looked at the stochastics. So now what's really, and I thought we would get a bounce. I didn't think it would bounce quite as far as it has. So as of last weekend, everything was kind of sitting just below kind of the 100 and 200 day moving average. Plus, we're just kind of running out of good news, right? Like what else what's the next really good news that's going to propel this 5 or 10% higher? Now, I'm not going to sit here and say it can't happen. I'm just saying, like, a lot of the good news I think now is priced in. And so when you kind of put all that together, I just feel like it's running out of steam. And and there's a couple of gaps that need to get filled as well. One of them is only like 3 or 4% away, and the other one's more like 10% away. But when I put all that stuff together, it tells me that we're probably due for a pullback.
Brent, this was awesome. Having you come on and talk macro and talking gaps, what's better than that on a Wednesday morning? Everybody go and follow Brent at Santiago Funds on Twitter. Check out what he's doing at Santiago Capital. It's always a pleasure to have you on the show, Brent. Thank you so much for your time today. I really, really appreciate it.
All right. Thanks for having me, guys. Good luck.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.